Hey, it's Sam with Calder. Welcome to your May buy-side off-market update. Hey, we've all been told not to judge a book by its cover. Turns out the same rule applies to buying a business, maybe more so. Some of the most interesting opportunities we see start as deals buyers were ready to dismiss in the first 30 seconds. The price the seller threw out felt way too high, the financials looked like a mess, the owner wasn't sure they actually wanted to sell, but once the buyer dug in, the deal got more interesting. And in a lot of cases, it changed how that buyer thought about what they were actually looking for. But before we get into why that happens so often, here's a quick May update. In May, our buy-side team generated 302 introductions, held 123 calls and meetings, submitted 18 offers, closed 1 deal, and currently have 22 deals under letter of intent. That brings us to 12 total buy-side closings year to date. Activity moderated slightly from April, but the LOI pipeline grew to 22 deals, the strongest depth we've seen this year. The story this month isn't really about that pipeline though. It's about why the universe of deals worth a closer look is almost always bigger than buyers think going in. All right, back to judging a book by its cover. To talk about that, I wanted to bring in someone who's seen this play out across hundreds of buyer conversations. Joining me today is Edson Ramirez, one of our buy-side advisors. Edson has been at Calder since 2019 and is one of our most experienced deal makers with hundreds of deals he's worked on across his career, including time on the deal team at a private equity firm and in corporate development at a national tier 1 automotive supplier. He's a great voice on this topic, so let's get into it. Have you seen a situation where a buyer was about to walk away from a deal and you pushed them to take a second look? Walk me through that.
Yeah, this happens all the time. Very, very common occurrence. And it's the same theme of, I feel, especially as it relates to the buy-side services at Calder, a large portion of the value of a search is seeing a large quantity of deals and learning from that diligence process to find out what should my criteria be, you know, and whether, if you're a financial sponsor, you might be a little bit more ahead of the game on that, but especially as it relates to strategic acquirers with lower volume of deals, and especially individuals who are maybe for the first time searching or for the first time contracting with somebody.
Absolutely. We constantly see buyers refining criteria as they go along, being open to different things, making decisions about what not to look at by learning, by interacting with owners. So why do buyers misjudge fit so often early on? What's actually happening in their head when they dismiss a deal too quickly?
Yeah, a lot of times it's what they've read or seen in media, preconceived notions of their background and where their fit's going to be, and finding the perfect company with the perfect criteria. And a proprietary search is not going to surface the perfect company in a lot of cases. And frankly, we're talking about the lower middle market that we operate in. And if a business hit all the perfect criteria, they wouldn't be in the lower middle market to begin with. So it really is about, it's very individual as it comes to a company. And I think as a search goes on, you know, certain buyers do get a little bit more open to it and see the value, and wow, my scope is expanded and I can look at more companies.
Absolutely. We often use the dating analogy to describe this process because you got to experience different things, and rarely is the first one ever truly the right fit, right? You also got to be ready for rejection too. So next question, you've made the point that the laziest form of company analysis is being critical. It's easy to be critical. Talk us through what doing the real work looks like instead.
Yeah, I think in this instance, I would recommend thinking like an institutional investor. You know, and maybe we can get to this point later, but you have to push every ball forward, and there's a lot of this game is volume. And as far as the laziness in being critical, there's a reason why a company has market share. There's a reason why a company has customers, employs people, has made earnings, is making earnings, and does so on a recurring basis. It's very hard to figure that out on an introduction, before a call, during an initial call that's more relationship building, that a lot of times requires a lot of hard work with revenue, cost of goods sold diligence, you know, other sorts of open source diligence that takes work.
Even strong-looking deals fall apart late for reasons no one predicted. So how should buyers hold that reality without becoming overly cautious on the front end?
Yeah, it's nuanced. As you have to balance the relationship of a seller. Are they serious? Can you sniff them out? Do they have reasonable expectations, or do you, even if they don't have reasonable expectations, do you think, hey, I think I can convince this business owner that I'm a good fit and in a real manner, right? Not just convincing them, but this is actually going to be a great fit and I think I can convince them of that. Is the analytical work of diligence going to come through? Do I see any big red flags early on that I can't solve? Or if there are, let's get them up ahead of time before we put in an offer. Let's bring it up and let's request that second layer of information. And frankly, some of the education to a seller is, hey seller, this is a big problem. And whether you sell to me or anybody else, let's figure this out now. And in a lot of cases, that kind of being candid and transparent helps the relationship to push a deal forward.
Absolutely. You got to remember, these are humans. We got to build relationships, dig deeper before you just decide to pass. Absolutely. Great point. Last question for you, Edson. If a buyer is jumping on a first call tomorrow with a business that doesn't look perfect on paper, what's the single piece of advice you'd give them?
I think it's to still take it as a relationship and first figure out what's the story of the business and how did it connect with its customers and how did headcount grow or not grow over time. And then from there, I think you can springboard into more analytical questions. Again, diving straight into grilling them on the major issues is usually not conducive at the first instance of a call. So unfortunately, again, it's going to take more time. It's going to take more information request, and it starts as a relationship and becomes more analytical. And I would say, for our clients at least, lean on the advisor to maybe have some of those tough conversations before, during, and after an introduction call.
Absolutely. We're just trying to get to know each other on the first call. We're not going in for the kill.
Agreed.
Awesome. Thank you so much, Edson.
Yep. Thanks, Sam.
Here's what I want to leave you with. Most buyers come into a search with a clear picture of what they think they're looking for. What Edson just described is something we see across nearly every search. The buyer who ends up finding the right business rarely lands on what they pictured on day one. Instead, they land on something that became the right fit once they actually understood the businesses in front of them. A lot of what our process is built to do is exactly that. Surface unique opportunities and help each buyer evaluate every one of them with an open mind. The buyers who get the most out of a search lean into every opportunity, learn each business thoroughly, and only pass once they actually understand what they're passing on. Even the deals that aren't a fit teach buyers something they'll use on the next one. It's easy to find reasons a deal won't work. The harder work and the work worth doing is figuring out why it might. If you're thinking about starting a search, or if you're already in one and have been quick to dismiss opportunities that didn't check every box, we'd be happy to talk.